Welcome to Investomania, brother.
Boom! Let's talk about Fitbit and their last earnings report. Third quarter revenue came in at $393.6 million, which topped both their own and analysts' estimates. Sales of 3.5 million devices with an average selling price of $108 bode well for Fitbit and show that the company's pivot to smartwatches may be regaining ground lost by their fitness trackers. This unexpectedly good report sent Fitbit shares soaring by about 1/3, just under 34% over a 4-day trading period after their report. Fitbit's upward spike has put the stock back on positive footing for 2018. The move, however, has merely regained the ground lost in recent trading, and shares now stand pretty much where they were about 2 months ago. Still, the market may be ready to push Fitbit even higher due to its top-line growth and return to profitability. After 7 successive quarters of decreasing year-over-year revenue, expectations were, they weren't looking so good. People, you have 7 bad quarters in a row. People just kind of start expecting things to go poorly. And that's why when things actually go well, you get this big old massive jump that you did this quarter. And surprisingly, this quarter on an adjusted basis, Fitbit eked out a small profit of 4 cents per share. Admittedly, the numbers weren't stunning, but revenue growth and profit is a heck of a lot better than what we've been seeing lately from Fitbit. The move into smartwatches appears to be a wise one. Fitbit blazed into new territory with its fitness tracker years ago, but since hitting a peak in 2016, they have continually lost ground to the increasing prevalence of smartwatches. Now, smartwatches propel Fitbit's revenue increases. It took a couple of tries, but then they came up with this Fitbit Versa, and they appear to have found the right mix of price point and features. Although it's still lagging far behind the sales of smartwatches like Apple and others, the new strategy marks a definite turn in the right direction. Over the last 4 quarters, the contribution made by Fitbit's smartwatch line has shot up from a small 10% to now a total of 49% of revenue. And the Fitbit Versa is picking up steam just in time for the holidays. Fitbit estimates fourth quarter earnings of 7 cents per share, or maybe even a little bit more. If the estimate holds true, the company will have strung together 2 consecutive successful quarters of profit following almost 2 dismal years. Fourth quarter revenue guidance of $560 million is below the $570.8 million taken during the same quarter of last year. However, due to Fitbit's poor performance these past few years, it appears they have become a bit more conservative with guidance, which is understandable. Hopefully, Versa's momentum will not stall. If its growth remains steady and strong, and Fitbit comes up with another 1 or 2 products that sell well along with it, or other smartwatches perhaps at different price points, the company can really see a sizable uptick on that top line. The company that pioneered wearable fitness devices, but then lost much of its ground to smartwatches, may be seeing a light at the end of the tunnel. The Fitbit Versa seems to have nudged its way into the smartwatch conversation. Next quarter results cover the all-important holiday season, and Fitbit appears positioned well to fill the carts of fitness-conscious holiday shoppers everywhere. So, is Fitbit a buy for you? It depends largely on your risk tolerance and how much you personally believe in the Fitbit Versa. There's a lot of room for potential growth here. If the Versa catches on strong, it will do a lot for the stock. However, Fitbit is competing in a red-hot space in the smartwatch category with fierce competitors who have deep pockets. And if things do not go well for the Versa, you could be in for a continued world of pain.
That's the bottom line, because Stone Cold said so.